All right, I'm here with lead economist Anthony Smith. Anthony, what do we have for our shippers today?
So we have something that I think you're very familiar with, of course, and that's going to be retail sales. We got the numbers just this morning showing, I think it was right around a 0.6 increase on a month-to-month level. I don't think it was too surprising for us. I know when we were on your show last time, we were talking about expectations for upcoming months for retail sales. Even last month, we were talking about it and what Amazon Prime Day might do to this this report. And lo and behold, we did see an increase. For some reason, I think expectations on Wall Street was showing a 0.4% decline for retail sales, but we did see an upward movement here. We did see upward movement for grocers, of course. Hospitality spending is going up, some services, big box retail stores, apparel, groceries, things like that.
Yeah, rising tide lifting all boats here with this economic reopening. Retail sales, that's right. We were talking about last month what we thought Prime Day could be. Prime Day eventually was really good. It was the largest e-commerce online spending event in the history of the U.S. I'm sure will get broken during Black Friday, Cyber Monday here in the fall, but over $11 billion spent in that 48-hour period just online alone. And you still had Target, you had Best Buy, Kohl's. Everybody else also offered competing deals in-store and online. So it's a lot of spillover effects to the entirety of retail, really.
Exactly, and I think one of the other big areas that we have to look at is auto. We haven't seen as much spending as I think many Americans would have liked to have put into auto because, of course, the semiconductor shortage. I don't know if anyone's been on a used car lot lately, but they are in dire need of vehicles. So if you're looking to sell, it's kind of like housing. If you're looking to sell a car, great, but it's going to be a little bit pricey to get into a new one. Just with all these markups. But looking at that, in our next chart, we're going to look at what was going on with specifically retail sales for non-store retailers. This was, we have in the blue line here, our VAN outbound tender rejection, or outbound volume index here, and in the green line, we have our retail sales for non-store retailers, which is going to be the main segment that saw a significant bump within the most recent report. And so this is really one of those things where we're seeing we're still seeing reports, consumers still being flushed with cash, savings rates still high. Debt that is accumulating is mostly non-revolving debt, so looking more at student loans, things like that. Some car loans for those that are car shopping now, getting into some of those car loans. But looking at credit cards, those debts, those revolving debts are still significantly low.
Yeah, still a lot of cash on consumer balance sheets right now and still spending online, right? We have,
Exactly.
You look at retailers and in-store physical retail, it is back, foot traffic's down 10-15% to 2019, but people are still spending a lot online.
Exactly, and so this is all, of course, downstream impacts. Just earlier in the week, we saw the consumer price index and we saw the producer price index showing those increased prices. And so really, we're also seeing that these consumers, these producers are not really fazed right now by the inflation. We also saw a note from the Fed talking about how the inflation levels are outpacing their expectations. I think everyone in the U.S. except the Fed was expecting this type of inflation, and now we kind of have that admittance that maybe it's going to be here for a few months. But the thing is, whether inflation's here or not, how is the economy going to react? And we're seeing that the consumers are still not phased as of yet.
Yeah, I think it's important to note about this most recent CPI report. It was the highest that we've had in 3 decades, but a third of the growth in prices came from used cars.
Right.
Because of the semiconductor shortage and the problems that we're having building new cars, it's pushing people into that used market. And as you said, the used car lots are just depleted right now,
Exactly.
so prices are very high. But if you look at other goods, across the board, clothing is actually deflated this year. We look at, we are starting to see some serious inflation at CPG and at restaurants. That's definitely significant to consumers. But overall, goods prices are kind of stable right now. They're elevated, but at least they're not growing as fast as they were in March, April, and May.
Exactly, and so that's going to be one of the things that we're going to be watching are those goods, because early on we've seen manufacturing really kind of ramp up new orders, and that hasn't slowed down one bit. If anything, it's just kind of moderating or easing at those high levels. That's telling us that production is still coming online. We even see in the latest industrial production number that machinery was still relatively strong in a month-to-month basis, and especially year over year, of course. So manufacturing is not slowing down. We're still seeing those massive investments in capital expenditures telling us and showing us that these producers are anticipating more activity in the coming quarters.
How about your home states, Philly, or how about your home states, Empire State manufacturing index topping an all-time high, 43 in the month of June. The Philly Fed, it came down a little bit, but still in growth trajectory. So regional Fed indices for manufacturing showing continued growth in both the Philadelphia and New York regions. Good sign. Anthony, thank you so much for your time.